Welcome back to the Daily Crypto Roundup. Today, we've got a really interesting mix across the market because this is one of those days where the stories are not just about prices moving up or down. We've got BlackRock pushing deeper into tokenized finance, Bored Ape NFTs showing signs of life again, PayPal and Google talking about AI commerce running on crypto rails, and XRP flashing a reversal signal that has caught traders' attention. So the big theme today is simple. Institutions are still building, traders are slowly taking more risk again, and crypto is starting to position itself as the payment and settlement layer for the next version of the internet. Just before we continue, this episode is brought to you by Kraken, our official exchange partner. If you want a simple, trusted place to buy, sell, and explore crypto, Kraken is well worth a look. This is not financial advice, and crypto trading carries risk, but if you do want to check them out, use the Kraken link in the description. It helps support the show and keeps these daily episodes coming. And if you use our link below, we will drop 20 XRP into your new wallet address. Now let's start with BlackRock, because this is probably the most important long-term story of the day. BlackRock has deepened its tokenization push with new on-chain fund offerings, and that matters because this is not some tiny crypto startup trying to hype a narrative. This is the world's largest asset manager continuing to move deeper into blockchain-based finance. The report says BlackRock has filed paperwork to expand its tokenized fund lineup, while real-world assets have grown around 200% year over year. That is a massive signal. It tells us that tokenization is no longer just a crypto buzzword. It is becoming one of the main areas where Wall Street believes blockchain technology can actually change the financial system. The reason this matters is because tokenization takes traditional financial assets and puts them on-chain. That could mean tokenized money market funds, tokenized treasuries, tokenized private credit, tokenized equities, and eventually a much larger range of financial products. The attraction is obvious. Assets can potentially settle faster, move more easily across platforms, operate around the clock, and become more programmable. Instead of waiting for old settlement systems, institutions can start building products that behave more like internet-native assets. And this is where people need to separate price action from adoption. Retail traders often look at crypto and say, Bitcoin is down, or altcoins are boring, or NFTs are dead. But behind the scenes, the biggest financial firms in the world are still building the infrastructure. BlackRock is not doing this because it wants to be part of crypto Twitter. It is doing this because it sees a future where parts of traditional finance move on-chain. That does not mean everything happens overnight, and it does not mean every tokenization project will succeed, but it does mean the direction of travel is becoming very clear. The important point for investors and listeners is that tokenization could be one of the biggest real-world use cases for crypto over the next decade. Stablecoins proved that blockchain rails can move digital dollars quickly. Tokenized funds could be the next step. If money market funds, treasuries, and other financial assets become tokenized, then crypto rails become part of mainstream finance rather than sitting outside it. That is a very different story from the old idea that crypto was just speculation. But then, on the other side of the market, we've got the Bored Ape Yacht Club comeback story. CoinDesk reported that Bored Ape NFTs are finally showing signs of life again, with floor prices doubling in a month as traders rediscover their appetite for risk. Now let's be clear, this does not mean we are suddenly back in the 2021 NFT mania. It does not mean every NFT project is about to explode, but it does tell us something very important about market psychology. Bored apes were one of the biggest symbols of the last bull market. They represented speculation, status, celebrity adoption, digital identity, and the idea that NFT communities could become major cultural brands. Then the market collapsed, NFT liquidity dried up, floor prices got crushed, and a lot of people wrote the whole sector off as dead. So when Bored Apes start moving again, the story is not just about JPEGs. It is about risk appetite returning. Crypto cycles usually move in stages. First, Bitcoin stabilizes. Then Ethereum starts to move. Then major altcoins begin to catch a bid. Then traders slowly move further out on the risk curve into smaller coins, meme coins, gaming tokens, AI tokens, and NFTs. The Bored Ape rebound could be one of those signs that traders are becoming more comfortable with speculation again. That does not mean it is safe. It does not mean it is guaranteed. But it does suggest the market is no longer completely defensive. The key question is whether this NFT recovery has real legs, or whether it is just a short-term bounce from oversold conditions. For Bored Apes to sustain a comeback, the project needs more than nostalgia. It needs active community, strong brand execution, real usage, and a reason for new buyers to care. The NFT market has changed. Traders are more cautious now. They have seen what happens when liquidity disappears. So if Bored Apes are going to become a serious comeback story, it has to be backed by more than the old hype cycle. Still, from a market point of view, this is worth watching. When old high-beta assets start moving again, it usually means traders are looking for upside. That can feed into broader altcoin sentiment. It can bring attention back to crypto culture. And it can create a feeling that the market is moving from survival mode into opportunity mode. The third story today might be the biggest long-term technology story: agentic commerce. PayPal and Google representatives have reportedly said that agentic commerce will run on crypto rails. In plain English, this is about AI agents being able to shop, pay, book, subscribe, compare, and transact on behalf of users. Instead of you manually searching, clicking, entering card details, and approving every single transaction, AI agents may eventually do a lot of that for you within rules you set. That creates a huge payments problem. Traditional payment systems were built for humans. They were built around bank cards, logins, checkout pages, and manual approvals. But if AI agents are going to operate across the internet, they need payment systems that are fast, programmable, open, and machine-readable. That is where crypto rails come in. Stablecoins, smart wallets, open payment protocols, and multi-party custody could become the infrastructure that allows AI agents to transact safely and efficiently. This is where crypto becomes much bigger than trading. If the next version of the internet is full of AI agents acting on behalf of people and businesses, then those agents need money rails. They need to know what they are allowed to spend, where they can spend it, how the transaction is verified, how refunds work, and how custody is handled. Crypto already has a lot of the ingredients for that world: programmable wallets, smart contracts, stablecoins, transparent settlement, and open networks. That is why comments from PayPal and Google matter. These are not fringe companies. PayPal is one of the biggest names in digital payments, and Google is one of the biggest names in internet infrastructure and AI. If companies like that are openly discussing crypto rails for agentic commerce, it tells you the conversation has moved way beyond should crypto exist. The new question is, which parts of crypto become useful infrastructure for the AI economy? Now, this does not mean every crypto project benefits equally. It probably benefits the strongest rails, the strongest stablecoin networks, the best wallet infrastructure, and the chains that can handle real usage. It also potentially benefits projects connected to payments, identity, settlement, custody, and institutional-grade infrastructure. The market will still separate winners from losers, but the overall direction is bullish for the idea that blockchain infrastructure has a role in the next phase of commerce. And then finally, we need to talk about XRP, because XRP is flashing a reversal signal that traders are paying attention to. According to BN Crypto, XRP funding rates have stayed negative for an unusually long stretch, even while XRP has gained around 27%. That matters because negative funding usually means traders are leaning short. In other words, a lot of people are betting against the asset, or at least positioning defensively. But if price keeps rising while funding remains negative, that can create pressure for a reversal or even a short squeeze if momentum strengthens. The comparison being made is to a previous setup where XRP went on to rally sharply after a similar funding pattern. Now, we need to be careful here. A signal is not a guarantee. Just because something happened before does not mean it automatically happens again. But it does tell us that XRP is in an interesting position. If traders remain heavily bearish while price keeps grinding higher, then the market can become vulnerable to a move in the opposite direction. For XRP, The bigger picture is still about whether it can reclaim key resistance levels and turn sentiment back in its favor. XRP has one of the strongest retail communities in crypto, and it remains tied to major themes like payments, settlement, institutional adoption, and cross-border finance. But the price still needs confirmation. A proper breakout would need volume, momentum, and follow-through. Without that, it can stay trapped in a range and frustrate both bulls and bears. So when you pull all of today's stories together, the market picture is actually very interesting. BlackRock is telling us institutions are still moving assets on-chain. Bored apes are telling us risk appetite is starting to return. PayPal and Google are telling us AI commerce may need crypto rails. And XRP is telling us that traders may be too bearish at exactly the wrong time. That does not mean we are guaranteed a full-blown bull market from here. There are still risks. Liquidity still matters. Regulation still matters. Macro conditions still matter. Bitcoin still needs to hold key levels, and altcoins need stronger follow-through. But today's stories show that crypto is not standing still. The market is rebuilding in several directions at once. Institutional finance, speculative culture, AI payments, and major coin reversals. My read is this: the market is not euphoric yet, but it is starting to look more alive. The serious money is focused on tokenization. The speculative money is testing NFTs again. The technology giants are looking at crypto rails for AI commerce. And XRP is setting up a potentially important move if the pressure keeps building. This is exactly the kind of market where you do not want to get lazy, because the early signs often appear before the crowd fully believes the cycle has turned. As always, this is not financial advice. Crypto moves fast, and risk management matters. But if today's stories tell us anything, it is that crypto is still moving toward the center of finance, technology, and online commerce. Keep watching Bitcoin, keep watching XRP, keep watching Solana and Ethereum, and definitely keep watching tokenization, because that could be one of the biggest narratives of the next decade. Drop your thoughts in the comments, smash like, follow, and we will see you at the top.